For more market reaction to President Trump's tariff policy, joining us right now in an exclusive interview here in Kiowa is Marc Rowan, CEO of Apollo, one of the most influential and important financial institutions in the world. Good morning to you.
Thank you for getting me on the beach. A little chilly, but still nice to be here.
We're all trying to make sense of what's happening here, especially as we're watching the markets drop this morning on the back of what looks like even more retaliatory efforts by China. Let's just start just basic. What do you personally think of these tariffs?
I think we needed to reset our trade policy. The U.S. is the second freest trading market in the world financially after Japan, and is the freest trading market in the world considering non-tariff barriers. Why is that written in stone? Why shouldn't we be the 10th or the 20th? The policies that have been in place since the end of World War II are not fit for today. I don't know that. I think the movie Everything Everywhere All at Once was probably a better movie than a recipe for trade policy. So one can, I think, quibble with the tactics. But the goal of resetting our trade policy doesn't bother me in the slightest.
Okay, but this is how you would do it, or you're saying this is not how you would do it?
No, it's certainly not how I would do it. But I think it's important that we just step back and think about it. So since inauguration, interest rates are lower. The PE of the S&P 500 yesterday was 21 versus a long-term median of 16. Air has come out of the market, probably appropriately. Unemployment is 4-ish%. 200,000 plus jobs were added. Massive investments are coming into the U.S. How should we have done this? Probably in a more logical sequence.
Okay, well, let's talk about what does that mean. So there was a moment where you were potentially a candidate for being the Treasury Secretary. If you were in Scott Bessent's role and you were sitting with the president and he said, how should I do this? You would tell him what?
Four big markets: Mexico, Canada, Europe, China. Get Mexico and Canada done first, get your budget done. China is its own thing, and then focus on Europe. The goal of what this administration wants to do is the right goal. The way they're going about it has three negatives. The three negatives are, first, that we're seeing is uncertainty. Uncertainty in the short term, and it's a very short term, will keep people from making decisions, keep people from making investments, keep people from making hires. That's not a great thing. We can survive that. The one I worry about more is the second, which is damage to the U.S. brand. What does our brand mean when it comes to long-term agreements, long-term security pacts? This was probably able to be done without damage to the brand. And three is we've increased the chance that we will have some form of accident which will lead to actual market volatility beyond, I'll call, a normal correction. And that's what I think we have right now is a normal correction.
There's so many things embedded in what you said. I want to just unpack them. The first piece was you said that you thought this was a short period of time, meaning you believe that we're going to get deals quickly?
I think the logical outcome is that we should get deals quickly. I was in Mexico City 5 weeks ago. I met with the 200 leading business figures in Mexico, industrialists, leading families, banks, brokers, and others. And I came back and I reported to the administration, to a person, they were pro-tariff, which is a shocking thing to say, because this group of leaders sees the market the way I see the market. The U.S. and Mexico should be positioned to dominate the economic landscape for the next 50 years. U.S. advanced manufacturing, Mexico the workshop, and so on and so on. Why haven't two agreements been able to get us to that position? And if you think about it, there are 5 issues. One is immigration, which is not Mexican immigration. It's Central and South American. It's second, Chinese transshipment of goods. 3 is fentanyl. 4 is AMLO's abrogation of contracts. And 5 is cartels. You ask Mexican leaders about those 5 issues, they want them resolved. One of the leading families said to me, if it takes tariffs to make Mexico great again, so be it. Imagine an administration that stood up and actually said, our goal is to do this. Tariffs are a means to an end to do this. The uncertainty of what the outcome is that the administration wants is creating uncertainty.
Right.
And doing things one at a time. I mean, Mexico and Canada are among our most important trading partners. Putting those two to bed, I think, is much more interesting than going after everyone, everywhere, all at once, which potentially has on it.
But they are going everywhere
Yes.
all at once, and that's where we are. And so the real question is, what does the off-ramp look like? Is there an off-ramp? And how quickly, to the extent you said you think this is a short-term situation, how short it really is on a morning when the Chinese are saying, you know what, we're going to raise you.
China is its own case. But my base case, and I will say that there's volatility around the base case, my base case is the administration will get deals done with the vast majority of countries, and tariff barriers will come down. I think that will be.
And how quickly?
I can't tell you how quickly, but I would expect relatively quickly.
But is that a month, 2 months, 6 months? Because if it is the type of, if it's anything more than what we're, even that kind of period, even a month, the uncertainty unto itself can become a self-fulfilling problem.
I would rather have uncertainty from 4% unemployment and adding 200,000 jobs than uncertainty, a different way. Having said that, no uncertainty is better. What do I expect? I expect over the next 90 days, we'll see the beginnings of countries coming to make deals. I think those deals that are purely financial, tariff rates, are very easy to make because it's a number. Those deals that involve non-tariff barriers, particularly with the EU, will be much harder to make and will take longer. I think uncertainty will come down if deals progress. Uncertainty will go up if deals don't progress.
Larry Fink says that he suspects we are either in a recession or headed towards one. Do you believe we are?
I don't right now. Right now, we've had about a week of this, so let's not get ahead of ourselves. Could the uncertainty actually cause a recession? It could.
Right.
We've had recessions before, but rarely from the kind of position we're in. Remember what we're doing.
But this is potentially a man-made recession. We're hearing the CEO of Delta, who's talking about travel. It's unclear whether they can grow. Walmart, it's unclear what kind of guidance they're going to provide. You own all sorts of businesses. I don't know what you're seeing.
We're seeing things slow down. I think there's no doubt that things are slowing down because of uncertainty. Having said that, at the moment, everyone who wants a job has a job. We are making massive investments in this country, and some days I wake up and worry how we're going to staff those investments with no immigration. And some days I worry about the kinds of things that Larry Fink is worrying about, which is we'll end up with a recession, which results in significant job loss. I think right now we've had a week of this. Financial markets have corrected. Those people who are tied to asset prices, who thought we had a God-given right that everything move up at 11% annually, are disappointed. Okay, let's actually deal with that. Markets got ahead of themselves. There's been a correction. It's not the strategy I would have employed. It's a riskier strategy than I personally would have employed. I think it has risks short-term, uncertainty, longer-term brand. But the goal of what the administration wants to do is not a bad goal.